The Mozambican banks, all of them, are making an important effort in improving their channels to the clients, mainly their digital channels. These days you can see all banks, they have different ways for the client to access the bank. USSD is still a very relevant channel, allowing for clients that only hold a feature phone to access their bank through the phone. But also all of them are currently offering very capable apps, and of course they have their own banking solutions available to more sophisticated clients like SMEs and corporates. So I think that the market is well developed, offering very sophisticated solutions to their clients. Also, we are seeing, the MNOs playing an important role on this, right? So the mobile network operators, MNO stands for that. They are also, playing an important role of financial inclusion, allowing for people that really can't afford a traditional bank account. Through their phone, they are able to make payments, ask for a loan, and hopefully in the future even do some savings through their phones. We really don't believe that fintechs are absolutely competing with banks. What we are seeing more and more is an environment that promotes partnerships between fintechs and banks. Fintechs don't want to become banks, there's quite a cost to become a bank, and banks understand that fintechs add a lot of value because they are very agile. They use the latest technology available. So it's really, these partnerships are allowing for the banks to enrich their offering to the clients. So we don't see fintechs as direct competition to us, but more an agile way to progress on our digital offering to the clients. I think fintechs, again, are good as a channel, for the clients to access, let's say, the bank, or the bank to access the clients. But not being banks, they have a number of limitations. A fintech, if it's a fintech focused on payments, they still need to have a partnership with the bank to process those payments. If they are focused on lending, they don't have a balance sheet, they don't have a license to do that. So what they do is they team up with the bank, they kind of, brand that loan under their own name, but from a contractual perspective, is the bank that is extending the loan to the client. There's very little that the fintech will be able to do on their own. What we are seeing in the market is these partnerships really coming to fruition and working really well for both parties, and especially for the client. At the end of the day, the client is the one that is winning. Look, that's a very important question. The fourth industrial revolution is just knocking at our doors, right? And it's not just about banking. I think all industries are being disrupted by technology. We are seeing that these days the tech tools that exist allow us to automate a number of activities that in the past were done manually, and therefore we need to definitely rethink the way we resource our businesses, right? And which solutions we have to continue to create employment in our countries. As you know, for all African countries, employment creation is a challenge, and we need to address that. I think the way to do it is really to make sure that we equip youth with the right skills. It's about the schools, the universities, really looking into their curriculums, into their programs, and ensure that they teach skills that are relevant for this fourth industrial revolution. So it will be less about doing stuff, and labor, and more about thinking, planning, engaging, coding, being really ready to continuously improve and change, and to continue to study throughout our lives. This thing of stopping to study once we leave college, I think it's over. we need to continue to upgrade ourselves continuously. The cryptocurrencies world. Look, banks and mainly regulators are still trying to understand the risks, but also the benefits that cryptocurrencies can bring to the global economy and, of course, for our local economies in each of the countries. Monetary policy is still, let's say, a concern for most of our governments and most of our central banks. Of course, we need to ensure a sustainable development of our countries, that there are clear regulations around how currency is handled in country and cross-border. We haven't yet found solutions that promote cross-border trading between our countries. Most of that trading is still settled through US dollars or South African rands, because there are no mechanisms, there are no platforms for local currencies to be traded between different countries. We know and we see some of our clients resorting to cryptocurrencies to do cross-border trading. We understand that it's a convenient and in some cases cheap way to transact cross-border, but there are a number of risks associated to that that we try to educate clients around that. Definitely to promote international trade and especially intra-African trade, we need to find solutions. I think that the economic agents are not well protected by the existing cryptocurrencies. Something new will need to come up. And we know that in a number of countries, central banks are planning to come up with their own cryptocurrencies, okay? That, of course, will be issued under a certain regulatory framework, with boundaries, with rules, but they will also offer a level of security that the existing currencies don't offer. So I'm sure that in the next few years we will see a lot happening around cryptocurrencies. I think it's something that won't disappear because, again, it's very convenient. There's a fantastic piece of technology supporting the way cryptocurrencies operate. There's all these benefits coming up from disintermediation on the trading of cryptocurrencies. But there's a number of risks that we need to understand and try to mitigate. The pricing of cryptocurrency is mainly driven by offering and demand. Okay, so if you're a trader of whatever good rice, let's imagine, you want to know the price of the rice before it reaches your warehouse, right? With the volatility that cryptocurrencies present these days, it's very difficult for you to ensure that, okay, this is the cost that I'm gonna face. So we need to find mechanisms that will bring some stability to whatever the name of the currency that will promote intra-African and international trading at large. Currently, it's very expensive for African traders, being them importers or exporters, to trade, because the cost of the financial flows cross-border is just too high, and that prevents cross-border trading from growing. So we need to find solutions for that. I think we shouldn't kind of make a confusion between mobile lending and cryptocurrencies, right? So mobile lending is not only regulated, but is supported by the local currency. So when you lend through a mobile phone and you make a disbursement to a mobile wallet, that disbursement, although let's say it's a virtual disbursement, is backed by money that sits with the bank. Okay, so there's no volatility, there's no risks to that. Crypto, it's a different world, right? It's an unregulated space with a lot of volatility. Again, very convenient. That allows for a number of solutions to be implemented, but doesn't offer the same safety as mobile lending. So I think it's important that everyone understands, and especially the regulator understands and communicates to the market the differences between the two things. I think first they need to work not in isolation, country by country, but they need to meet on a College of Regulators type of environment and discuss solutions that can be applied across the whole continent, or at least parts of the continent. Because if it's a country-only solution, probably it won't, make much sense, right? So first thing would be, please meet as a College of Regulators and discuss this subject. Second one is, please engage with the community. Understand the needs, understand the solutions that exist on the market, and let's find some common ground to build a solution that will really promote financial inclusion, that will promote cross-border trading, that will really move Africa, to a new level of economic integration. I think that's what needs to be done. More collaboration, more communication, and really all parties, to clearly map the risks and find mitigators to those risks.